Hey guys, it's Crossroads here. I wanted to talk to you tonight about if we can trust this rally. Now, what I mean is, of course, last week we had an insane rally following the election and also some earnings and a little bit of news as well on many, many names. Names like Robinhood went up 40%, Palantir up over 40% as well. Tesla ripped into the 300s. Crypto has hit new all time highs. And in the overnight market, let's take a look real quick. This is a screenshot, so I apologize, but my computer lags terribly when I'm trying to run this because it's older and also stream. But from just a moment ago, you can see the overnight action on these names is quite quite something to behold. Up 12% on many crypto miners. Cypher is not the only one. Robinhood hitting into the mid 30s. It's at 33 right now. SoFi up 5.5%. Even Palantir, which has hit nearly $60. It was actually $60 just a moment ago. Pretty much everything. Clean Spark is halted, by the way. That's why you see that it's down. Almost everything that I'm looking at that gets any kind of volume, and you can see the volume here on the side. It's low liquidity, so don't necessarily trust the overnight action, but it looks like it is absolutely pumping. And that's not all that I want to show you. Even you can see the S&P 500, of course, hit right at 6,000, closed right below it, and it wouldn't shock me if we open up to a new all-time high in the market. Now, is this a rally that should be trusted? I think it is, but with a couple of pieces of caution. So first, what happened last week is one of two scenarios that I think were really, really good for the country. It's basically macro certainty. What would have been very unhelpful, and I think a lot of people were preparing for, was a long, drawn out legal battle between who would be our next president of the United States. Now, whether that would be Kamala Harris or Donald Trump, the market would be very unhappy with that because it causes a lot of issues and it causes macro uncertainty. Now, I think that because of that uncertainty going into the election, almost everybody, myself included, thought it might be weeks, maybe even months before we know who is going to be the president of the United States. And instead, we found out that night. And so a lot of the hedging that happened and a lot of the money that was taken out of the market prior to that run up of the election, and we had a nice little dip going into that was put back into the market basically overnight or on day one. So I think that's part of the reaction there. I think that that's justified. Markets love and crave certainty. I don't think that they cared as much whether it be Donald Trump or Kamala Harris, but just having that certainty, that was exciting to them. Now, there is one Trump-related piece, maybe two, that the market is excited about. One of those is the corporate tax rates. That's one of those things that is going to be lower under Donald Trump than Kamala Harris, which means that the EPS for many of these companies will actually be higher than it would be otherwise. So, with that certainty as well, that is being priced in now. It was priced in last week. Who knows where that actually ends on individual companies? Another element that Donald Trump brings to the table is crypto regulation. I think this would have actually happened under Miss Harris as well if she had been president. But Gary Gensler has been a terrible SEC head. I have another video on it. I'll link it in the description. But regardless, because he is on his way out, all of a sudden we're going to have more clear crypto regulation. It's not going to be the Stop Everything Crypto Commission instead. And so Bitcoin has hit its all-time highs. It continues to do so. And crypto miners and any derivative plays are, of course, doing very, very well right now. Now, another factor, too, is we're near the end of the year. And a couple of interesting things happen towards the end of the year. One is tax loss harvesting. That's probably a video for another time. Be careful, by the way, I'll just say on names that are down big this year, as there may be some people looking to offset some of those gains. But another thing happens towards the end of the year. There are fund managers. These are not necessarily hedge funds, but typically that manage large amounts of money. And if they look and they see that they have been on the wrong side of the market this whole year, they are needing to do some catch up. And so they would rather, at this point, even though the market is up and moving up higher, throw money in and try to catch up, or at least make it so that they look like they didn't lag the market this bad and they weren't wrong on all these names for this time. And so I think that there's a bit of that catch up that's going on. There's a lot of people that are just realizing that they had it wrong. One of those other factors that I think is happening too is there's been money on the sidelines. And I know I don't mean the money in the money market funds. That's part of it. Perhaps some of it is entering into the stock market. And of course, rates are falling, which is going to put stocks in the position of Tina. There is no alternative at some point in the future. Probably not this year, maybe not next year, but sometime relatively soon. But there's another factor as well. There is typically in the middle of a bull market cycle, margin rather goes up immensely. We haven't seen that yet in this rally. It's a pretty normalized amount of margin that's on the side. And so it could be that many people are saying, you know what, there's a lot more money out there available between funds that are just collecting cash, collecting interest, and that's slowly going away, and the opportunity for more margin in the market. An additional factor is the AI cycle. I looked at this actually a couple of years ago and predicted that we would hit one of these. I didn't quite know or understand how it would be, but I just saw a lot of tailwinds for AI. And as such, I predicted back when Palantir was trading at $8 per share that we would see within 2 years Palantir likely hitting $40 a share. Of course, I look like a bear now because it is tapping at $60. Who knows where that ends? I'm just enjoying that. But we saw this quarter with the earnings a lot of beats across the board. And in the major hyperscalers, so the large cap tech, realized results with their AI products, not just on AWS and Azure, but on some of their other platforms that they're beginning to sell. They're seeing more use, and of course, everybody benefits from that. Fund managers and analysts and economists are beginning to see what I and many others also saw a couple of years ago, that AI looks like it has a capability to really propel a lot of tailwinds in today's economy. What that means is if you look back at the Roaring 20s, United States, that had a pretty great economy overall, is the era known as Coolidge prosperity. That was the era of mechanization. And so it was taking the time from when people would just dig holes in the ground with brute force and effort and use animals to machine power. And that increased productivity immensely. I see a similar correlation, of course, with AI. I'm not the only one doing that. But AI is beginning to have real results. And so some of that is also being priced in. Now, I do think that there are a couple of dangers to be aware of. One of those, and let me flip back the screen back here. You can see this is the S&P 500. It would be the similar on the NASDAQ as well. It's hard to see this, but this is the green line right here. This is called the Relative Strength Index, RSI. See if I can blow that up a bit. It's not going to let me. The way the RSI works is it's looking at the relative strength of the movement of the stock over the most recent 14 trading days, depending on the time frame. But I'm looking at the daily. When it gets at a 70 or higher, it is considered overbought. And if it gets below a 30, it's considered oversold. And so usually in most RSI indicators, I'm sure whatever broker you use has that, it'll show that when it's getting above or below those lines. Now, it doesn't always mean something significantly. And in a bull market, it tends to ignore going up a little bit more. It's not too concerned with that. In a bear market, the converse is also true. But there is a point when the RSI just becomes overheated and it needs to cool down. And usually that's right around 70. After a few trading days of that, unless there's some major catalyst, usually there's a bit of a pullback. Now, I don't expect a crash. Some people, of course, are always out there screaming a crash. And if they scream it every day, eventually they'll be right. Probably a 5% pullback. I'm not a macro guy, but that's just pretty common, maybe even a 10% at some point. But that may not come for the rest of this year. Of course, we're going to enter the Santa rally at some point here in the future. And a lot of it will also depend on the CPI print as well. But the other danger beyond just RSI and needing just a little time to cool down, which, that's a great time, by the way, if it does dip, to add to names that you're interested in. But the other danger is austerity. Now, this isn't a word that's been used much. It's not a pretty word. But what this means is supposedly, one of the initiatives that Donald Trump ran with was using Elon Musk and several others, possibly Ron Paul, in a DOGE commission, the Department of Government and Efficiency. Elon Musk said and claimed that there were $2 trillion of budget that could be cut from the United States government. That's not going to happen overnight. That has to pass regulatory scrutiny. But the Republicans do own both the presidency and both the legislative branches. And so they can get more things pushed through than would be otherwise if we were in an area of gridlock. So The danger for that for us investors is if government is all of a sudden cutting, which they absolutely should, and I'm in favor of. Usually that leads to just a little bit slower of an economy versus when they are printing money like crazy and they are spending it like crazy, which they're currently doing. And frankly, they did under the last two administrations. That tends to also propel growth. And so there may be short term headwinds if there are massive cuts coming. The question is whether or not you believe that that will be a reality. So, as far as myself, just to sum up, I think that this rally is real. There may be a pullback at some point. Dips in a bull market are to be bought. Bull markets can last a long time. And I think this is just the beginning of a long, sustained bull market rally, maybe over the next couple of years. So look at those names, figure out what you want to buy and at what levels you want to buy, and buy according to your convictions. Thank you for tuning in. Thank you for liking, commenting, and subscribing. As always, happy investing.